Hello fam, welcome back. It's been a while I posted. So in today's video, we are going to be looking at a simple 4-step process to flip your $5 account. So this is how we're going to take it, okay? First and foremost, we'll look at your main objective is to look at the charts and look for the strategy pattern. And then second is to wait for the market to come back to your POI. And then the third is to look for confirmation. And the fourth is to execute. All right. So those are the 4 simple steps to flip your $4, $5, $10 account. All right. In this video, I'm going to be showing you proof of how I flip $10 to $100, $10 to $20 to $200 and so on and so forth. Be it the currency market, be it the synthetic market, anything is actually possible. So without wasting much of your time, guys, let's move straight up to it. And please fam, don't forget to hit the like button and subscribe to this YouTube channel for more and more wonderful videos like this. So here, if you can see my screen, so right here, you are looking for the sell model. For the sell model, you look for the sell model, the market has to be pushing to the upside. Then you wait for for a situation whereby the market is trying to actually create a high but fails. Okay, so in that particular case, a sweep of liquidity is formed. So that sweep of liquidity is formed because in this particular case, the market, there are buyers from here, and then who are actually anticipating that this market is going to keep going to the upside. All right. And then there are also buyers at this point who are anticipating that the market is actually going to break out and then retest and keep going to the upside. But what happens? The market decided to do its own thing, leading to a sweep of liquidity and a break of structure. So after the break of structure, what are you waiting for? You wait for a pullback. And this pullback should be at at least 50% of your Fibonacci 2. So after that, you wait for a second break of structure. So this is the model. This is the sell model. So when we are done looking at the sell model, we'll also look at what they buy model. All right. So it's just a simple 4-step process to actually use and flip your account. So now let's go back through it again. So you have the market pushing to the upside. Then you have a pullback, and then you're expecting a continuation to the upside. So assuming for some retail traders, they were buying here, not knowing that the market has a deeper underlying stuff that is actually, there's a bigger picture. So here we have a sweep of liquidity, and then that sweep of liquidity leads to a break of structure to the downside. So this now give us this break of structure. That means the buyers here have also been liquidated. So, and then this pullback must actually happen, and it must be 50% of the Fibonacci 2. Okay, so I teach this. All right, I teach this stuff which you can actually use to flip your account. So it must be 50% or above. So this one is actually valid. This is to provide structural liquidity that the market will later take out, all right, for you to get your entries. So here we have our second break of structure. Okay, we have our second break of structure right here. So here becomes our protected high, all right, and this low becomes our protected low. I just hope you guys are actually following, fam. Here becomes our protected low. So, all right, here our protected low, here our protected high. So, and now we mark out our POI. Our POI stands for our point of interest. So the first rule is to identify the model. Okay, when you identify the model, you wait for the market to actually come back to your point of interest. And then the third rule is for the market to actually give you a confirmation, then a swing to your target. All right. So it doesn't require much for this to actually happen. You sell there, you get to confirmation on the 5 minutes time frame, you sell, and then you take your profit. So it's just simple. You can, for the flip to actually be successful, you need a confirmation. Why? Because it gives you a tight stop loss. But if you have to be conservative, which you'll not be able to flip your account, you just have to keep your stop loss there at a safer end. So let's look at the reverse. So let's say the market is pushing to the downside, then you have what? A sweep of liquidity. You understand? What happened is the market came to retest this level, keep pushing back. See, they actually buyers here. So what happened? The market actually sweeps that area, push to the upside, breaking structures to the upside, and then giving us a pullback, which is must be at least 50%, and then breaking the second structure. So there must be two breaks of structure, and then market coming back to this area. Then you have a confirmation, and then you take a buys. So you take a buys to that target. So I'll be showing you. Let's look at some examples. All right, let's look at some examples. I feel like there was a setup here yesterday which I actually missed. All right, so you can actually use the 5 minutes time frame, the 10 minutes time frame, any time frame of your choosing. So right now I can actually decide to go to the 10 minutes time frame. I don't want to waste your time, okay? I don't want to waste your time. All right, so this is the 10-minute time frame. What are we looking for? Right, so the market must be pushing to the upside. So right here you have a temporal uptrend. So you have what? The sweep of liquidity. All right, we have a sweep of liquidity right here, guys, as you guys can see. So we have a sweep of liquidity. You can still decide to use this one, but I think I prefer the current structure because that gives me alignment very well. And then we have a sweep of liquidity, a break of structure right here. So if you go to the 5 minutes time frame, you'll be able to see this clearly. And then we have a pullback. Pullback should be at least 50%. So that 50% pullbacks now gives us what? Our structural liquidity. So you can actually use this engulfing candle right here to be your POI, okay? Because right here, somehow I think I prefer to use that area right there. So this becomes your protected high, all right, and then this becomes your protected low. So what happens? You have your confirmation, all right. As soon as you just have your confirmation, you see you have confirmation here. So let's assume you entered here, and then your stop loss just slightly above that candle. And what happened? You just, sometimes the market can be funny. What happens? You see you TP. So it's simple. It's just very, very simple approach, guys. No too much. So right here you can clearly see I had a setup here. So let me see, you have a sweep of liquidity. All right, so you can actually get it as a reversal pattern or continuation pattern. So in this particular instance, we had it as a continuation pattern because already the market is to the downside. So we have a sweep of liquidity. We have what? A break of structure to the downside before we had our pullback. So let me just drag this a little bit so that I can make it clearer for you guys to actually see. So we have a sweep of liquidity, which is right here. All right, and then we have a break of structure, which is right here. Then we'll have a pullback. All right, pullback to that particular area that provides what? Structural liquidity. And then we have a second break of structure. But in this particular case, the market did not actually come back to the point of what? Interest. So the market did not come back to that one. So let's look at the 50. I think 51 seconds. Yeah, I think I had a setup there yesterday. Yeah, let's look at this 51 seconds. I don't want to actually extend this video to be too long. All right, I just want to make it short so that you guys can actually be attentive. All right, so on the VIX 51 seconds, which was right here yesterday. So the market was actually pushing to downside, and then I think there was some form of reversal here. So all right, so within this area here, you can see that the market tried taking out these highs and then fell back, and then there was what? A sweep of liquidity right here. All right, so there's a sweep of liquidity right here. So then there is what? A kind of break of structure, but the market did not actually break it totally, and then there was a pullback, which was, if you check with your Fibonacci 2, that's more or less like a 50%. So let's check. So you see that's more than a 50%, so which is actually valid. And then if you look here, the reason why this setup is actually valid, if you look here, there was a high, there was then the sweep, okay? You see that sweep right there. So it's actually a valid setup. So this becomes your protected low, and then your protected low, and then your protected high. So this is your target. So all right, so you see, let's mark out our POI. All right, so that's that. Very simple, very demure technique. All right, so you see our confirmation candle. All right, so you see those candles. Now let's go to the 15 minutes time frame. I think it will be more clear. So two examples is actually okay. So you see the 15 minutes candles, the confirmation. All right, so see that. So you take your entries and then your stop loss, you load them. The stop loss just slightly below, and then see how you have made some good money for Christmas. So fam, here we go. It's very, very simple, very straightforward. Anybody can actually master this. So hit the like button, subscribe to this YouTube channel, and then share this video to as many persons as possible. So stay blessed, fam.